Namaste, good morning. The session where we complete our amendment lecture series, okay, uh, and try to get ready for the next level, that is the revision series. At the end of it, I'll speak about it. Yesterday, we had a detailed idea about reassessment procedures, the newly incorporated reassessment procedures. We had an idea about 147, that is the assessment section. 148, that is the section which specifies the notice on reassessment. 148A, the newly announced show cause notice, the newly introduced show cause notice. Okay, and I have told you to be very clear about this particular section, because there are chances of questions in this particular section: when show cause notice has to be issued, when it need not be issued, what is deemed, all these things. 149 spoke about the time limits available for issue of notice for completing reassessment. 150 is no time limit provision. 151 is the authorities which are essential. Okay, authorities who are essential for completing it. 152 is the miscellaneous provision. 153 is the time limit for completion of entire assessment. Time limit for completion of entire assessment. In that, I have, as I told you, 148A gives a very good opinion, a very good aspect about show cause notices, so that assessing officer can drop. Okay, in this, everywhere we have seen this word called specified authority. Specified authority. Okay, in this, everywhere we have seen this word called specified authority. Who is a specified authority? It is easy now to remember the terminology specified authority. Up to 3 years, up to 3 years above the rank of commissioners, above the rank of commissioners, up to 3 years. Okay, beyond 3 years, if you want to go for principal commissioner or principal director general, the topmost authority. One authority down is acceptable in some cases. We'll not go into those cases, but generally it is up to 3 years and more than 3 years. That is that 151. So everywhere it is specified authority. Show cause notice, I have to issue specified authority. After issuing the show cause notice, I should consider whether I should drop the case or proceed with the case. Specified authority. Okay, so the terminology specified authority gets importance everywhere, everywhere. Okay, and that's why we said that if we read all these things and go to 147, we will have a decent idea or a great idea than to do it on the reverse manner. Okay, a quick writing in our notebook. I know we have written about 147, the order of the sections we have written. Okay, and I start with 148A. In the center of the line, 148A, show cause notice. In the center of the line, 148A, show cause notice. Okay, with two falling branches. With two falling branches. With the two falling branches, I want you to write it because it gives you a greater idea. Okay, 148. Actually, I am going to first concentrate on the second branch. I am going to first concentrate on the second branch. When show cause notice is not essential, when this need not be issued, when this need not be issued. A, A, when it is, when the reassessment is due to, when the reassessment is due to search, when the reassessment is due to search slash deemed search, when the reassessment is due to, when the reassessment is due to search or deemed search, when the reassessment is due to search or deemed search. I told you what is deemed search. Search of another person. Says search of another person because it belongs to that person. Okay, it belongs to that person, or it is pertaining to that person, that books of accounts or documents pertains to that person. Then it is a case of deemed search. Then it is a case of deemed search. Search slash deemed search. In this case, show cause notice need not be given. Now coming to this, the other side of the branch. Now coming to the other side of the branch. Okay. In all cases, in all cases, show cause notice is mandatory. In all cases, show cause notice is mandatory. So that on the right hand side, you will have the exception. In all cases, show cause notice is mandatory. Okay. Show cause notice is mandatory. Next point under that, time to be given to the assessee under the left hand side only, because here it is not mandatory. So only here we need to write time to be provided to the assessee. Time to be provided to the assessee. What is the time limit I need to provide? Okay, minimum 7 days, minimum 7 days, maximum 30 days. Minimum 7 days, maximum 30 days, full stop, continue. However, this can be extended. However, this can be extended if sufficient reasons are shown. However, this can be extended if sufficient reasons are shown. This can be extended if sufficient reasons are shown. Okay, if there is good amount of reasons, then the period can be extended. Third or next point, in that I am only in this side. In this side it is mandatory, we all know. I am only on the left hand side. Okay, third, okay, after receiving the reply, after receiving the reply, or after the end of the 30-day period, after receiving the reply, or after the end of 30 days period, AO, AO has to decide, AO has to decide whether to proceed, whether to proceed with the assessment or not. Whether to proceed with the assessment or not. Such a decision such a decision shall be made within 1 month from the end of the such a decision shall be made within 1 month from the end of the month in which reply is obtained. 1 month from the end of the month in which reply is obtained, or time for reply lapses. Reply is obtained or time for reply lapses. Okay. My next chart to you is about the center of the line time limits with three falling branches this time. The center of the line time limits with three falling branches. With three falling branches. First, I am looking into the extreme left, where where reassessment is not due to where reassessment is not due to where reassessment is not due to B and C. That is, it is not due to this or it is not due to this. Okay, where reassessment is not due to B and C. Under that, where reassessment is not due to either B or C, my dear friends. Okay, then 3 years, the time limit is 3 years from the end of the relevant assessment year. 3 years from the end of the relevant assessment year. Okay, under that, this point we have studied in the regular classroom as a general provision also. However, if the escaped income, however, if the escaped income is due to, if the escaped income is due to assets located outside India, assets located outside India, 16 years. Okay, next branch, that is the second branch, is deemed information. Deemed information. Deemed information due to deemed information due to search, survey, or other provisions. Or other provisions. Other provisions here, another person. That's what I mean. Okay. Mandatorily 3 years. Mandatorily 3 years. So what is the difference between 1 and 2 is, here I can open one of the 3 years, not all 3 years. Here I need to open for all 3 years. No, yeah, maximum of 3 years in the first case. Here also 3 years. Okay. The third column is beyond 3 years up to 10 years. The third thing is beyond 3 years up to 10 years. Beyond 3 years up to 10 years. What is the conditionality? What is the conditionality? Uh, what is the conditionality? Okay. Income under that income escaping assessment, income escaping assessment should be 50 lakhs or more. Income escaping assessment should be 50 lakhs or more. 50 lakhs or more. Okay. In the erstwhile law of 153A, also there was a similar provision for such cases. I want you to understand this. Okay. A raid has taken place. A raid has taken place. Okay. Year 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. The past 10 years. This year, the AO finds that income escaping assessment is 40 lakhs. Should he open it? Should he open it? Yes. This is okay. This is mandatory. Even here, if it is nil, also it is mandatory. Okay. This is also mandatory. 4, 5, 6, 7, 8, 9, 10. Please understand what I am telling. I will go to an extreme example. I will go to an extreme example. Here it is nil. Here also it is nil. Here it is 60 lakhs. And all other cases nil. Erstwhile law gave the clarification, which will hold good here also, I believe. AO can open this year alone. I have the option. First 3 years is mandatory. I should not look at the income at all. The next years 50 lakhs மேல இருந்தா I can open in only 1 year or some of the year. So I will open this year alone. Or the second option is using this as an option, I can open 4 to 10. 50 lakhs once it is extra, 50 lakhs per year. If the income escaping assessment is more than 50 lakhs, I can reopen. I can reopen from all the years. Why the law has kept it so? Here in this case, if I am the assessing officer, I will open year 6 alone. But imagine this is 10, this is 10, this is 30, this is 10, this is 10, like that it goes. Individually, in none of the year, it is more than 50. But if I collectively take, it is more than 50. So I can open, I will open from 4 to 10 everything. If income can be related to one particular year, which is possible, and the year that he has traded in shares, that year he has sold a property which has gone undisclosed. That year he has received a property as gift which has disclosed and which has gone undisclosed, and the stamp value is more than 1 crore. Open that year alone. You need not open all the 4 to 10 years. Ask him to file the return for year 1, 2, 3 plus 6. But In a search environment, what do we find? That the total income escaped assessment is 40 crores. In the 40 crores, which year? Over the period of 10 years, it will be. I will not be able to identify to which year it is. I need to apportion it. So I will open 4 to 10. So I will open 4 to 10. Okay. That is why the third criteria is beyond 3 years. If you want to go, the department has to have a substantial sum as income. That is why it is said beyond 3 years it should be and it cannot go beyond 10th year. It cannot go beyond 10th year. Law of limitation. Okay, it cannot go beyond 10th year. Within 3 years from the end of the relevant assessment year, same thing holds good. He can go back and open the 4th year. Yeah. Only until 10th year. No, 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 no. Only until 10th. Yeah, she was asking me from that year can I go back for 10 years? No, from this year you can go back only for 10 years. Just a moment. I need to open the PDF in something else. Just a moment. So not more than 10 years. That's the principle. Okay. So right. And then the issue of notice everywhere has to be within the specified authority. The number of times the word specify authority comes is important, and then the 147. So my dear friends, the two questionable area which I feel okay is most important both in terms of MCQ and in terms of this 148A and 149. Be clear about it. Okay, now moving forward, when is this no time limit provision? This is not an amendment. This is not an amendment. The no time limit provision is if you want to give effect to the findings or directions of an order passed by an appellate authority. Okay, an order passed by an appellate authority. This is not a case for you. Okay, this is not a, I have not seen a case for you. This case is not there for you in this year. There is a very famous call PP works. Okay, right? PP works no case law. AO completed assessment under 147. AO completed assessment under 147, treating income, okay, under, let's take a financial year 14-15. Financial year 14-15, I completed the assessment, treating the income under 14-15. Assessee went on an appeal. My dear friends, Assessee went on an appeal. The tribunal gave a judgment. Okay, this income is not taxable under 14-15. This income is taxable under 15-16. Understand the case? This income is not taxable under 14-15. This income is taxable under 15-16. Okay. Now, AO issued 148 notice for 15-16. Assessee said that the notice is time barred. நீ 3 வருஷத்துக்கு தான் ஓபன் பண்ண முடியும். You can only open it for 3 years. Your 3-year time period is over. Okay. So 2021, 1920, 18-19. These 3 years only you can open. You are opening for 15-16. The AO took recourse in this section. I have not opened your case due to anything. It is to give effect to the findings of a direction contained under the order passed in the appeal proceeding. So it is not me, it is the appellate authority which asked me to open, so I will open. This is a no time limit provision. Faceless assessment is yet to be notified for this particular section. Okay, miscellaneous provision says when, at what rates it is taxable. Okay, so I am opening in 2021 an assessment of 1718. So எந்த ரேட்ல இதை டாக்ஸ் பண்ணுவேன்? 1718. Okay, tax will be levied at the rates applicable for the respective assessment year for which the income has escaped, not in the rates of the current year. It will be respective assessment year. Okay, assessee can also contend you have already taxed me at a higher rate. Don't now again reopen, you are not going to gain. Because it can. You have already taxed me it as an STCG, which will be 30%. Now by reopening, you are only going to increase my LTCG, which will be only taxable at 20%. I have already paid the tax at 30%. So there is no point reopening. The assessing officer may drop the case. Okay, time limit 12 months from the end of the year in which 148 notice is issued also. 12 months. Okay, what is the time limit for completion of 143 assessment? Okay, and immediately I'll also tell the answer, don't worry. 9 months. Yesterday I told you they have reduced it to 9 months. Now 148 is 12 months. Am I clear to you? Okay, reassessment. Please remember, certainly a questionable area. Certainly a questionable area. Okay, okay. Okay, from here, I'm going into a new amendment. Okay, there are three aspects which is not there in our regular class. We missed it out. Okay, I'm going into a new amendment. Okay, a new inclusion. அதுல ஒரு direct question இருக்கும். Okay, what is the new inclusion I am talking about? I am talking about a new inclusion called Dispute Resolution Committee. Okay, Dispute Resolution Committee. Why? Let me tell you why. Previously, there was something known as Settlement Commission. Till financial year 2021, Settlement Commission. Okay, in my own language, if I want me to tell, in law there should be two things, to especially revenue laws, economical laws. There should be two things which will be very useful for the law. One, penalty should be high. Penalty provisions should be high, so that people comply with the law very well. And then there should be law of confession. At one point of time, you should allow his hands to be raised. There should be law of confession. Settlement commission was law of confession and it is gone now. Okay. We have replaced it with something known as dispute resolution committee. இவங்க என்ன பண்றாங்க? What is dispute resolution? Settlement commission is for big assessees, the raid case law. This is for small assessees. What is dispute resolution committee? This is, it is going to grant you immunity from no assessment completed, penalty, interest waiver, all these things you can go to them. Who can tap the doors? That is very important. That is going to be the question also. Who can tap the doors of this dispute resolution committee? Your income returned in your return of income, your income is less than 50 lakhs. Your income is less than 50 lakhs. And the proposed variation by the assessing officer due to assessment order should be less than 10 lakhs. If the rental satisfy achina, you can go on and you can go for the dispute resolution committee asking for immunity. Unfortunately, I am being asked to pay the penalty, etc. My income itself is that I am in a lower income bracket and my variation is also not high. Who cannot go in this is a big list. இது மாதிரி நான் ஒரு லிஸ்ட் இது வரைக்கும் ஆக்ட்ல பார்த்ததே இல்லை. Who cannot tap the door? Of course, I accept 132, 132A people cannot go in this. Raid cases people cannot get the immunity. That's okay. Immunity will not be offered if you are prosecuted under Foreign Exchange Act, Indian Penal Code, Smuggling Act, அப்படின்னு ஒரு list of act கொடுத்துட்டாங்க. If you are prosecuted in any of these things, சம்பளமே 50 லட்சம் is income. Okay, but we are talking about bigger acts, Black Money Act, etc. If you are prosecuted, not prosecuted means judgment passed. In that case, immunity cannot be offered. Okay. What is this dispute resolution committee? What is their role? Because you have removed the settlement commission, this comes into play. Their role is to offer immunity. Okay, their role is to reduce or waive any penalty which is imposed under this law and grant immunity from prosecution. Okay, sentencing them to jail, etc. Okay, of any punishable offense, and it is purely a faceless procedure. It is not a meeting of the AO. Okay, friends, the questions are things: specified order, specified person. Okay, okay. The central government shall constitute one or more dispute resolution committee. So in every area they are going to jurisdiction or group of jurisdiction as may be necessary in accordance with the rule for dispute resolution for such person or classes of person as may be specified by the board, who may opt for dispute resolution under this chapter in respect of dispute arising to variation in any specified order, who fulfills specified condition. So there are three things. Who is that person? Okay, what is that order? What are all the conditions? These conditions might not be a question in my opinion. It will be who is that person, what will be the order. Okay, and DRC is final. You cannot dispute against the DRC. You cannot go on an appeal against the DRC. Okay, so in our notebook, dispute resolution committee. Dispute resolution committee. Okay, dispute resolution committee. Okay, for resolving, not resolving, sorry, for granting, for granting immunity from penalties and prosecutions, for granting immunity from penalty and prosecutions for specified assessees against specified order, for granting immunity from penalty and prosecutions for specified assessee against specified order, provided specified conditions are fulfilled. Okay, so we will answer who is a specified assessee. Specific condition, it's enough if you see the material. Who is a specified assessee? Okay, who is a specified assessee? Whose return of income, whose return of income does not exceed 50 lakhs. Whose, sorry, income in return of income, whose return of income, or whose income in the return of income, whose income in the return of income does not exceed 50 lakhs, whose income in the return of income does not exceed 50 lakhs. ஒரு reason இருக்கு நான் அப்படி எழுதுறதுக்கு. Okay, in his ROI, his return of income is 30 lakhs. Proposed variation is 10 lakhs. Can he go for it? Can he go for immunity? Can he, why? He can. He can go for that. In his ROI, he is declaring 45 lakhs. Proposed variation 10 lakhs. இப்போ total income as per assessment order is 55 lakhs. Can he go for okay? Yes. Yes. Remember, I am not saying return assessed. அப்படின்னா அதுக்கு அர்த்தம் வேற. If the law has used the word return assessed is more than 50 lakhs, he cannot go. In this case, he cannot go. But the law has not said so. The law has said that in the returned income, it should not exceed 50 lakhs. So in this case also he can go. In ROI, if it is already 51 lakhs, he cannot go. Even though the proposed variation is 1 lakh or 2 lakhs also, he cannot go. Okay, are you clear? So where okay, income and in the return of income does not exceed 50 lakhs. Specified order. on a specified order. The draft order as specified by the board. The draft order as specified in the board by the board. Can you recollect the word draft orders from somewhere? Yes, we can recollect this from faceless assessment. In faceless assessment, the assessment unit 1 does not pass a final order. The assessment unit 1 just passes the draft order, and then it goes for the review, recollection, everything. For all transfer pricing cases, a draft order was only passed first. So, draft order, okay, as may be specified by the board. Second, the aggregate sum of variation, the aggregate sum of variation, the specified order, the aggregate sum of variation proposed in the draft order, aggregate sum of variation proposed in the draft order does not exceed 10 lakhs. The aggregate sum of variation proposed in the draft order does not exceed 10 lakhs. Am I clear to you? Okay. Who cannot, or which order cannot be, which order cannot be which order cannot be applied with DRC? Which order cannot be applied with DRC? That is, you cannot tap the doors of dispute resolution. Order passed under, order passed based on a search conducted under 132, order passed based on a search conducted under 132 slash 132A or survey under 133 or an order passed by obtaining information from outside India. By obtaining information from outside India. That is DTA 90 and 98. Am I clear to you? Okay. Now, you need not write this. Please just have a look at it. I don't think it's a question even. Specific condition relates to person has not been detained. Proceeded கூட இல்லை, detained. Order pass ஆயிருக்கணும். Foreign exchange and prevention of smuggling, Indian Penal Code for unlawful drug and psychotropic substances, prohibition of benami transaction, prevention of corruption, prevention of money laundering, okay, in respect of whom prosecution has been initiated in the income tax authority for the offence under the provisions of Act or Indian Penal Code for the purpose of any civil liability, okay. So I don't think that will be a question. Okay, I don't think that will be a question. Specific condition. He should not be prosecuted under any other law. That's what is the sum and substance of it. Then, as I told you, since settlement commission is getting scrapped, what happens to the applications which are already mentioned, which are already there in the settlement commission? Income tax settlement commission becomes inoperative from 1st Feb 21. Pending application before settlement commission shall be transferred to what is known as an interim board for settlement. Assessee who has filed such application at his option may withdraw within 3 months and the AO and intimate the AO that he has withdrawn. Power and function of settlement commission under this section shall be exercised or performed by interim board. That is just what is popularly known as transition provision. Okay, since an old provision gets scrapped, it gets into a transition provision. Okay, coming back to administrative amendments. Coming back to administrative amendments, my dear friends, okay, to a larger extent, you have seen the following. Okay, 139 related amendments you saw. Okay, slashing down of dates. Okay, 3 months. Okay, slashing down of dates. It boiled down. It come down to 3 months for belated return. Okay, for belated return and revised return, it came down to 3 months. Okay, in 143, those small amendments, but it also has a significance. Okay, it also has a significance. There also, time limits got scrapped. Okay, 143.2, scrutiny notice can be issued within 3 months and assessment has to be completed within 9 months. Okay, right? So these two things we saw in 143. Okay, actually there is one small amendment might have got 143 1A. What is this? Prima facie adjustment. இதுல ஒரே ஒரு amendment, that is when are all additions can be made, arithmetical errors and mistakes. இதுல one of the இது is if audit report, okay, has disallowed something. Okay, audit report has disallowed something which you are not disallowed in the return of income, that becomes a prima facie adjustment. Auditor has said that the cash payment has exceeded. Auditor has said that the cash payment has exceeded 10,000 to the extent of, let us take 10 lakhs, and the 10 lakh should have been disallowed in the return of income. If you have not disallowed it, then okay, then that becomes a prima facie adjustment. That is the only small amendment in 143 1A. Okay, the whole of 147 is taken a different seat. Okay, after that there are no amendments in 154, 263, 264, everything waiting for the faceless notices. Okay, there is no amendment in 154, 263, 264 or any of the related sections, or any of those related sections. I don't see an amendment. Okay, so with this, the administrative part of the amendments get over. Small areas which we will see as we go into the class. Okay, now 245 MA. 245 MA. Now, some of the other amendments, okay, which we are going to see. We are going to start from the again from the top. When I say other amendments, the chances of questions are less, but I don't rule out. Okay. We have been studying this in section 112A. And classification also we used to study. In the case of listed shares and equity oriented funds. In the case of listed shares and equity oriented funds, okay, up to 12 months it is a short term capital asset. More than that, it is a long term capital asset. Then 112A says where STT is paid on listed shares and equity oriented funds up first to 1 lakh not taxable, beyond 1 lakh it is taxable at 10%. What is this equity oriented fund? Okay, equity oriented fund means, yes, fund set up under a mutual fund which is exempt, which is coming under 1023D, or under a scheme of an unit linked insurance plan where the second, fourth, and fifth provision apply. Repeating, equity oriented funds means a fund set up under a scheme of mutual funds which is specified under 1023D, or under a scheme of insurance company which is a ULIP to which exemption does not apply on account of provision 4 and 5. Do we remember provision 4 and 5? Where the premium exceeds 2.50 lakhs individually or collectively, then it will not be exempt. Okay, so that is also. There are two other criteria to qualify under equity oriented fund. There are two other criteria. That is, the business trust law, we have seen this condition. I invest in SPV, the SPV should invest in real estate properties or immovable properties. Adhe madda. An equity oriented fund invest in a fund, in another fund, and that other fund should have invested more than 90% in listed shares. இல்லாட்டி அது ஈக்விட்டி ஓரியன்டே கிடையாது, எல்லாமே லிஸ்டட் ஷேர்ஸா தான் இருக்கணும். Unless it is investing in the listed entity, why am I giving that 10% benefit? Okay, where equity oriented funds invest in the units of another fund which is in a recognized stock exchange, minimum 90% of such fund is invested in units of such other fund, and such other fund also invest 90% in the equity shares of domestic companies listed in a recognized stock exchange. Okay, the condition not only is for the EOF, it is for the investee also. Where you are investing, they should also fulfill. இதே தான் business trustலையும் we have seen what the special purpose vehicle should do. In any other case, minimum 65% of the profit should be invested in equity shares. If you are not investing through the funds, then in any other case, okay, percentage shall be computed taking the monthly averages, okay, and it should be consistent throughout. Okay, this is an amendment in equity oriented fund, but rare amendment, but still it is an amendment in what is equity oriented. Okay, right. Friends, before going into the next amendment, which I think can be questionable areas in a small manner, okay, I want to speak about this cooperative banks. Okay, slowly the government is decontrolling cooperative banks. There are two types of cooperative banks: primary cooperative banks or primary cooperative societies, and banks. Primary cooperative societies or sometimes directly banks. Please understand, take your time in this. Okay, in the primary cooperative society, majority of the time is only for members. Now, a primary cooperative society want to become a cooperative bank. A primary cooperative society want to convert themselves into a cooperative bank. How the provisions are going to apply? A cooperative bank want to merge. How the provisions are going to apply? Shall I repeat? In the business reorganization chapter, majority of the amendments which we have seen in this year pertains to two things. In the business reorganization chapter, business reorganization means change in the constitution, change in the format of working. Majority of the amendment we have seen is pertaining to two things. One is cooperatives, second is Air India, which is Air India or LIC, which they call it as strategic disinvestment. Okay, we call it as, the government call it as strategic disinvestment. Majority of the amendments are pertaining to these two things. Okay, normally நம்ம என்ன சொல்லுவோம், 51% of the shares should be held by the same person for carry forward and set off of loss. 100% government owned, now Tata owns. Can Tata carry forward the losses? Technically no, unless 79 is changed. Unless 79 is changed. அதே மாதிரி தான் இந்த primary cooperative society, companies amalgamation we know. Then the losses can be carried forward. What are all the principles? Here it is different. Okay, let me look into business reorganization. The following shall not be treated as transfer. Section 47 la first set of amendments. Any transfer in a scheme of amalgamation by a banking company with a banking institution sanctioned by the, so I am merger of cooperative banks. Next point very clearly, any transfer, first one, two commercial banks, Punjab National Bank, etc. Any transfer of business organization of a capital asset by a predecessor cooperative bank to the successor cooperative bank. ரெண்டுமே cooperative bank தான். இதுதான் ஓகே, லேட்டர் இந்த லால ஒரு இடத்துல எக்ஸ்பிளைன் பண்றாங்க. ஓகே, okay, I have written this in 44 dB. The provision is applicable when there is a conversion of primary cooperative society to a banking company. அதுதான் இங்க வந்து predecessor successor. Somewhere in the law they have explained it. I haven't captured it. Predecessor here means primary cooperative society, which is also a bank, but which was operating for a smaller circle of people. Now to a successor cooperative bank, it becomes a bank. Okay, and any transfer by a shareholder, that is for the entity, this is for a shareholder in a business organization, predecessor cooperative bank, so the shareholder will get it allotted. Am I clear to you? Okay, this is for cooperative society. Transfer of capital asset by Indian Infrastructure Finance Company Limited to an institution for financing infrastructure and development. Transfer of capital asset by a plan approved by central government by a public sector company to another public sector company, mainly for life insurance corporation. They have brought it because this investment has started. Okay, so this is one thing with regard to capital gains. Okay, with regard to business or profession on the reorganization, we have seen this, we know this. we know that if there is an, for example, if there is an amalgamation, okay, if there is an amalgamation, there are some assets which are used by both the transferor and transferee during the year. Both the transferor and the transferee. There are some assets which are used both by the transferor and by the transferee during the year. நாம என்ன பண்ணுவோம்னா, we will compute depreciation, and such computed depreciation on the basis of effective days. Okay, we would have distributed on the basis of effective days. We call this as proportionate depreciation. We call this as proportionate depreciation. We compute the depreciation and distribute it between the two entities based on effective dates. Okay. For example, some other things are there which is popularly known as amortization. Amalgamation, demerger expenses, preliminary expenses. Many places I always used to say provisions will apply to the transferee company as it would have applied to the transferor company had the event not taken place. Okay, இங்கேயும் அதேதான். Okay, year of transition, how to handle. Year of transition, how to handle. Okay, section 32 depreciation, how to handle. 35D preliminary expenses, how to handle. Amalgamation demerger, VRS compensation. Okay, year of transition. During the year, the primary cooperative society has become a cooperative bank. Okay, how to handle. The law says, find out the total of this expenditure into days of bank, okay, divided by 365 or 366. Okay, total number of days. Simple formula. The total expenditure will be apportioned between the entities based on effective period. What is effective period? The predecessor, that is the primary cooperative society, can claim total deductions under all these things into number of days till immediately preceding the reorganization divided by 365 or 366. Straightforward, we have been doing it in amalgamation, doing it, but this is a specific provision for cooperative societies. Next comes section 72A. This is also carry forward of business loss and unabsorbed depreciation in the case of amalgamation demerger. I told you this is for Air India, LIC, such entities. Amalgamation of one or more public sector company with another public sector company, erstwhile public sector company with another. இதுதான் important. Amalgamation of public sector companies இல்லை, erstwhile public sector company with one or more companies. What is strategic disinvestment? Here we will understand. A company which was a public sector company, Air India, in earlier years and ceased to be a public sector company due to strategic disinvestment by the central government, which results in reduction of share capital below 51%. Okay, below, it can even be zero. Okay, so it is known as strategic public, okay, investment, disinvestment. Strategic what is strategic disinvestment? Where the central or the state government is giving away more than 51%, or they are reducing their holding to less than 51%. That is known as strategic disinvestment. Am I clear to you? Okay, right. In what period losses can be set off? If the share purchase agreement entered under strategic disinvestment restricted immediate amalgamation of the said public company, and the amalgamation is carried out within 5 years from the end of the previous year in which the restriction in the share okay, share purchase agreement put within 5 years you can amalgamate, and then you can start the set off. In case of an amalgamation of a public sector company with one or more company, the accumulated loss and unabsorbed depreciation shall not be more than the accumulated loss and unabsorbed depreciation of the public sector company on the date on which it ceases to be a public sector company. Okay. Up to the date of 100% holding only, you can accumulate the loss. After that, the loss does not belong to you, and it needs to be okay. This can be a theory question for you. This can be a theory question for you. That is strategic disinvestment that is going to happen. Can you write in the notebook and keep? Okay. In business reorganization, in just like that, write a note and keep. In business reorganization, the two important amendments are pertaining to the two important amendments are pertaining to a primary cooperative societies converted into cooperative banks, primary cooperative societies converted into cooperative banks. I'm not talking about amalgamation of cooperative banks, that is already there. And B, strategic disinvestment. And B, strategic disinvestment. Under that, in both the above cases, it will not be regarded as transfer under section 47. In both the above cases, it will not be regarded as transfer under capital gains. Next point, in case of one, that is the primary cooperative society becoming a cooperative bank. In case of one, depreciation and amortization, depreciation and amortization will be distributed between the entities, will be distributed between the entities based on distributed between the entities based on effective usage period, based on effective usage period. Third, in the case of two, that is strategic disinvestment, in the case of two, loss and depreciation of the amalgamating company till the date it remains to be a public sector, till the date it remains to be a public sector company, loss and depreciation till the date it remains to be a public sector company shall be carried forward by the transferee company. Okay. Okay, we'll write the fourth point also. But before that, let us understand, as I told you, this is for section 79, losses of unlisted companies. Easily understandable is unlisted company. At least 51% of the shareholders should continue. There are some exceptions due to death, due to inheritance, due to gift, like that. There are some, okay. One of the exceptions added in the current year is for computing 51%, following will not be considered. To a company to the extent that a change in shareholding has taken place during the previous year on account of relocation of capital fund from original fund to resulting fund, that is mutual funds are now asking themselves to be dividing into dynamic portfolios, static portfolios, and consequent to a transfer of a capital asset being a share or unit held by a shareholder or unit holder or interest holder in the original fund, etc. That is only for the mutual fund. The second, to an erstwhile public sector company which has become as a result of strategic disinvestment. Accordingly, loss in any previous year prior to and including the year of strategic disinvestment shall be carried forward and set off by the erstwhile. However, this relaxation shall cease to apply from the previous year in which the company, that was the ultimate holding company of such erstwhile public company, immediately after completion of strategic disinvestment, ceases to hold directly or indirectly through its, that is, once they are also going to disinvest, I will not provide this. Okay, but what you have to, it's very too early from that year, so don't worry about the second part of the provision. That is, if suppose Tata subsequently sells it off, okay, they are also disinvesting their, okay, லாஸுக்காக மாத்திரம் they should not amalgamate. That is the criteria. Okay, so the next point you have to write, in case of two, in case of two, loss of the loss of the erstwhile public sector company, loss of the erstwhile public sector company can be carried forward by the transferee company in a scheme of strategic disinvestment. In a scheme of strategic disinvestment. Okay. In deductions chapter, it is only extension of dates. There is no new deduction that came into being. This housing loan up to 1,50,000 you can claim. Okay, the house should have been purchased first in 1920, then 19 to 21, now 19 to 22, now 19 to 23. Okay, so it's only extension of date. Huh? Yeah. In the classroom, all these are covered in the classroom. Okay, I'll tell you what we 10 RB nu which is a later circular which we didn't do it. Offshore banking unit again, okay, 100% of transfer of aircraft or helicopter for IFSC units located in International Financial Service Center. Eligible startup is extension of date. Eligible housing project is extension of dates. All the other provisions are the same. It's only extension of date. Okay. We did DRC. Okay. We did interim board. Okay. Now I am going into interest and fees related amendment. In that fees related amendment, I have already told you about the change in 234F consequential amendment. We had previously said up to 5,000 till January to March, if you are filing your return, 10,000. That 10,000 now becomes inapplicable because we have changed the due date of filing returns to 31st December. So only 5,000 is applicable. Now for this particular 234C related amendment. 234C related amendment. Now please understand, normally what happens? I am liable to pay my advance tax in 4 installments. June 15, September 15, December 15, March 15. 15, 45, 75, 100%. When and what are all the exceptions to the case of advance tax? 10,000. If your total tax due is 10,000, no problem. If you are opting for presumptive computation, only the last installment of advance tax is applicable. Only the last installment of advance tax is applicable. And the third aspect is for senior citizens who does not have business income. These three. Apart from it, there is a very good provision in advance tax, especially 234C, which says you are supposed to estimate your income. Some income you cannot estimate. Few incomes you cannot estimate. Can you tell at the beginning of the year itself, this year I will win a lottery of 5 lakhs? This year my LTCG will be so much? You cannot. Okay. So, in the case of LTCG winnings, you are not asked to estimate new business output. In case of LTCG and winnings, you are not asked to estimate. The law understands, boss, you cannot estimate. I accept you cannot estimate. So, advance tax liability will not arise. Advance tax liability will not arise if it is before that date. Okay? But once you obtained it, pay 100% in the immediate next installment. Sir, எனக்கு ஜூன்ல நான் பே பண்ண வேண்டாம். There is no winnings. On September 1st, there is a winnings. In the next installment, you should have paid 100%. Now you are no more estimating. I am giving you one benefit, but withdrawing you on the other side. This year's amendment says I will include one more item in that is deemed dividend under 222E. This year amendment, the amendment specified deemed dividend shall also fall under the special provision. In other words, it need not be expected or estimated, but tax has to be paid. 100% of the tax has to be paid as soon as it arises. Okay, I am just taking up a question. I have not framed it. Now I am framing it. Okay, let us take that Mr. A has a business income of rupees 15 lakhs for FY 21-22, and on 1st December 21 he got a loan from a closely held company in which he holds more than 10% voting power. To rupees 8 lakhs. Compute advance tax that should have been paid by Mr. A. Okay. He has a business income of 15 lakhs. Can you quickly write down the question also? Okay. The amendment heading is amendment under 234C. Amendment under 234C. Okay. His business income for financial year 21-22 is 15 lakhs. Deemed dividend on 1st December is 8 lakhs. Deemed dividend on 1st December is 8 lakhs. Compute the advance tax he should have paid. On this 15 lakhs, we all know how to compute tax. This minus 10 lakhs into 30% plus 1,12,500. Along with HEC. This will be done. Okay. For the 8 lakhs, directly 30% because already. Now understand, okay, computation of advance tax installments. Computation of advance tax installments on or before 15th June. Okay, for 15% of tax on business income. 15% only on the business income. Correct? Huh? On or before 15th September, 45% of tax on business income. Because till that time, I will never know I will get a deemed dividend. Minus already paid, whatever is already paid in the previous installment. Okay, and this is the key answer which I want you to understand. Okay, on or before 15th December on or before 15th December, 75% of tax on business income plus 100% of tax on deemed dividend plus 100% of tax on deemed dividend because there is no more estimation. Of course, I understand in June and December, in June and September, you cannot estimate. Now there is nothing to estimate. You got that, you pay the tax. Okay, so 2,73,000 into 75% plus 2,49,600. So this is an amendment. This is the same case for LTCG. This is the same case for winning. That is this year. Okay. This amendment, this computation is important. This is that is yeah 36%. That is not for this 100%. Here 100% you should have paid. எங்க 36 அந்த இது கிடையாது. I understand 12%, 36% interest will not arise, but here there is no such immunities. There is no estimation involved. That's what the law says. No, it is the realistic. It is an estimation even for a company, but for you, you received a loan. You have got a loan from a closely held company. Are you clear it is taxable? Where is the question of estimation? I'm not even asking you to estimate. Okay, okay, right? So please understand this is about deemed dividend, which is included in 234C. 234F, as I told you, is restricted to 5,000 now. And if the person's income does not exceed 5 lakhs, it is only 1,000. It is only 1,000. Okay. These are all the amendments with regard to domestic. Okay. The DT part, which is 70%. Okay. International taxation has the lowest level of amendment, but there are two bigger amendments which needs to be understood in detail. Okay. I'll take a coffee break and be back. Starting back. My dear friends, direct taxes amendments, I again tell you the order of importance is reconstitution. The assessment procedures, slum sales, and all other small areas, including tax audit limit, including the small areas, are very important. Very important. Okay. If at all, we'll go through the law again. If at all I have missed something, I will compensate that in the revision process. Before going into international taxation, in the revision classes, I will do questions on amendment, but I will not be again explaining you the amendments. So whoever want to attend the revision classes should go through the amendment lectures. I mean, I know you are all attending, so telling you doesn't, you will in turn tell your friends. In the international taxation, one amendment in PP of 115 JBD and one reconstitution of advanced ruling authority are going to be some questionable area. Otherwise, the amendments are in the tax rate of few things, but these two are questionable area. First, I am starting with transfer pricing. The threshold limit, one minute, this is amended. This is, I copied the old thing. This is amended to 6,600 crores. ஒரே 1 minute. 1 minute, I will take the 5,500. 6,400 crores. Very recent amendment. This is 6,400 crores. The 5,500 has become 6,400 crores. Okay, for reporting, country by country reporting, CBC reporting, that the limit, okay, because of currency fluctuation. This is not an amendment to just give you any improvement. Currency has fluctuated. 2 years back, it was 5,500 because of currency fluctuation. Okay. Okay. Now, coming to the most important amendment of transfer pricing. Because of transfer pricing in 115 JB. இப்போ transfer pricing there are two amendments which are two cases where our income increases due to advance pricing agreement and secondary adjustment. I have to increase my income, okay, right? That interest on secondary adjustment, which you are going to account for all these things, okay. You you will make it in the previous years. This adjustment will be made in the previous year for all past years also. The year in which you enter into APA, the year in which you are making the secondary adjustment, for the past years also you will be making it in the current year, okay, because of which your book profits will change, because of which book profits will change under 115 JB. Or a small relief which is very similar to section 81 89, okay, a small relief is given by the law. What is that relief? Had it been taxed in that year, I'm not taxing it this year, had this been taxed in that past year itself, how much would have been my tax? I would have paid only 80 lakhs. Now, because I am taxing it in the previous year, I am paying 92 lakhs. This 12 lakhs will be given as relief. Repeating, what is the relief mechanism in this? Okay, we are going to write it, but first listen to it and write it. This provision is applicable if the book profits in the previous year has included due to APA or secondary application, secondary adjustment. Sorry, so I just saw the comment, but it will be better if you. Voice breaking. Okay, Niteshri, I will do the needful. Hopefully, it should not, it should be temporary. Let us see. If it is continuously there, let me know again. But kindly text me. Okay. Repeating. Provision is applicable for advance pricing adjustment made due to APA or secondary adjustment. Application will be made by the assessee only for recomputing the book profits. Where such an application may be made, section 154, rectification of mistake. Rectification, assessing officer will take it up under 154. Rectification of mistake, 4 years is the time limit. Okay, within 4 years from the financial year in which application is received. But if you have already utilized it as MAT credit, I will not again do it. I will not again do it. Okay. And one promise is I will not charge any interest also for this. I will not charge any interest also for this. Write down in your notebook. Okay. MAT adjustment due to APA or secondary adjustment. Is the voice breaking continues still, my dear friends? MAT adjustment due to advance pricing, APA or secondary adjustment. Okay, point number one. Adjustment is made in the current year, whichever previous year we are talking about. Adjustment is made in the current year to the book profits. Point number two. Adjustment is made by AO on the basis of an application presented by Assessee. Adjustment is made by AO on the basis of application presented by the assessee. Point number three. Adjustment is made under section 154. Point number four. Adjustment shall not be made if MAT credit is already availed. Point number five. Relief under section and under rule 10 RB will be provided. Relief under rule 10 RB will be provided. Okay, all of us, relief is equal to A minus B minus D minus C. Relief is equal to A minus B minus, next bracket open, D minus C. Okay, let me explain to you what it is. A is equal to income of the previous year by including the past adjustment. Sorry. MAT of the previous year by including the past adjustment. B, MAT without including the past adjustment. C, MAT of the past year to which the adjustment pertains to. MAT of the past year to which the adjustment pertains to. D. Math of the past year to which the adjustment pertains to by including the past income. Math of the past year to which the adjustment pertains to by including the past income. Okay, C and D, I think they have interchanged. C minus D போட்டிருக்கலாம், but D minus C கொடுத்துட்டாங்க. Okay, friends, if this comes as negative, then it is 0. Okay, if any of this becomes negative also, it is 0. Math applicable இல்லைன்னு வச்சுங்களேன், then also it is 0. Okay, right? So, once more, NRB says relief under section 115 JB due to the due to applicability of the new rule 115 JB 2D. A. Okay, MAT payable. இந்த taxன்றது MAT தான். Okay, payable by including the past income. MAT payable, I am written tax payable under 115 JB, which is nothing but MAT. So, MAT without including the past income or after reducing the past income. MAT of the past year or years for which the past income belonged to. MAT of C plus relevant past income adjustment. Okay. If the relief is negative, then it will be taken as 0. Similarly, if A, B, C, D shall be deemed to be 0 if there is no tax payable. Okay. I haven't included a question. I'm going to give example and work out questions. Okay. Book profit for financial year 21-22, let us take it as 100 lakhs, 1 crore. Okay. Book profit for financial year 19-20. Let me take it as 40 lakhs. Adjustment of 19-20. Adjustment of 19-20 carried out in 21-22, 15 lakhs due to APA. Compute relief under 10 RB. Compute relief under 10 RB. Okay, shall I? Before that, let me also side by side have. We all know MAT rate is 15. 4% is the, okay, let me not do that. It will be confusing you. Okay, I'll do that totally. A, book profit of 21-22 by including the past adjustment. I am getting 100 lakhs plus 15 lakhs. 115 lakhs. 1 crore 15 lakhs. MAT is 15%. Okay. Surcharge is 7%. Okay. HEC is 19 lakh. 19,580. MAT. Okay. 15%. Add surcharge. Add HEC. Are you clear? Okay. Right. What is D? Hmm? Yeah. Book profit without past adjustment. That is nothing but on 100 crores. Okay. Into 15%, and HEC will only come, surcharge will not come, so it will. Okay. At the primary level, you understand, right? நான் வந்து இந்த வருஷத்துக்கு I should have only paid 15 lakh 60,000. ஏதோ வருஷத்தோட tax this year I am including and getting surcharge. Okay, so 15 lakh 60,000. Book profit of 1920 without adjustment as it is. Book profit of 1920 plus past income 40 lakhs plus 15 lakhs. Relief is A minus B minus D minus C. A minus B minus D minus C. I am getting a relief of 1,25,580. 1,25,580. Correct? Nava? Sorry. Friends, logic is simple. Had I paid in that year itself, I would have paid this much. Because I am including it this year, I am paying more. Okay? Because of various reasons, I am paying more. That is the logic of this adjustment. It is a relief provided because you are paying MAT. Such as yeah, yeah. You will do if the whole answer comes as negative, there no relief. Relief is zero. Okay? The question I want to answer that question specifically. The question asked is when will I not if the answer comes as zero negative, then it will be zero. You will still do it negative. Sir, yes sir, negative varum. Appadina, if you ask me a question, I have two answers to you. In that year surcharge comes because of this. This year surcharge is not coming because of this. Okay, due to that negative will be there. That is one small reason. Big reason you all have to understand is previously MAT rate is 18.5%. Previously MAT rate is 1819 law. MAT rate is 18.5%, which is reduced to 15%. So when you include it there, you will be taxing it at 18.5%. Now, so 15% tax பண்ற ஒன்னத்தை minus 18.5 போட்டீங்கன்னா அது நெகட்டிவ்ல தான் வரும். Okay, that is why it is said that if it is negative, it is yeah. They will very clearly give in the question if it is 18.5%. Otherwise, they 15% only they are going to give. You know, roll back a 4 years then. So, இதான் the marginal relief என்ற இது இந்த கம்பெனிஸ்க்கா ஓகே அது என்ன 1 crore 2 lakhs வரைக்கும் தானே வரும் இது ரொம்ப 1 crore 15 lakhs போயிட்டு இந்த if the surcharge is more than the increase இல்ல தான மேட்ச் okay we will do one more question. Let me take this as 50 lakhs. Let me take this as minus 10 lakhs. Okay, in 1920. And the MAT adjustment, let me take it as 40 lakhs. Let me take it as 40 lakhs. Why I am taking this case is Remember, if in any year MAT is not applicable, okay, if the relief is negative, so A, B, C shall be deemed to be zero. Okay, shall be deemed to be zero. In this case, in the given case, the C might be zero. Minus 10 lakhs க்கு நீங்க போட மாட்டீங்க. நெகட்டிவா வரவே முடியாது. So C might be zero. Just start working. I'll just try. ஏன் போடாம எப்படி இருக்க முடியும்? A minus B. A minus B, how will you do? C தானே zero. No, no, no. If A minus B minus C minus D is negative, zero. If one of them is zero, that you need not compute. Hold on, எவ்வளவு வருது? First, my dear friends, A by including the past adjustments, 50 plus 40. Okay, 50 plus 40, 90 lakhs. There will not be any surcharge. It is 15% plus 4. I am getting 14 lakh 4,000. 90 lakhs into 50 plus 1 5, 15% plus 4% HEC. I am getting 14 lakh 4,000. Okay. Now I am working out without that adjustment. This answer only taking, that is minus 40, only taking, I am getting 15% MAT, add surcharge. Okay. So I am getting 7 lakh 80,000. Okay. I am getting 7 lakh 80,000. Then on the book profit of 1920 without adjustment, it comes to minus 10 lakhs. Minus 10 lakhs. So this will become zero. You need not compute that. One nimsha, I will prove you also why you are not computing. Then on the 30 lakhs, how I got 30 lakhs minus 10 plus 40. So I am getting 30 lakhs on that 15%. So my relief comes to 1,56,000. My relief comes to 1,56,000. Okay. Uh, Zero. A minus B. Yeah, pakka. Yes, 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 yes. Yes, yes. If it is not arising, it is an assumption that they are paying tax as per MAT. Okay. Our friend asked us, we are, what if tax is payable at normal rate? MAT will not come, this relief will not come. Okay. Entire question gets importance. நீங்க இங்க பாத்தீங்கன்னா, he is paying close to 7 lakhs. 6.2 lakhs he is paying extra. But he is getting a relief of only 1,56,000. Had he paid in that year itself, so you don't think relief always nominal. Okay, so relief will be one other thing which I suppose in the minus 10 lakhs போட்டு பாருங்களேன் ஒரு example. Okay, okay, so it will be minus 156, so it will vanish. Okay, so that's why they said anywhere minus comes, you should not do it. You should not do it. Okay, right? Am I clear to you? Okay, so please understand, this is a relief only if MAT is paid. It is A minus B minus C minus D. Okay, and there is a chance of questioning because international taxation amendments are less. There is a chance of questioning. Okay, I will again do some couple of questions when I do revision class. Okay, for my friends who are from regular classroom, this circular came in September. I missed it out. That's why it is not there in our material. Okay, okay, so kindly understand this. This will be part of our tax. The next biggest thing is about business. ஒரு 4 வருஷமா something was due, which is now fulfilled. Uh, 4 years back we said business connection includes significant economic presence. and we were unable to define what is significant economic presence. We were unable to explain what is significant economic presence. This Finance Act 21 has defined it. Okay, transaction in respect of any goods, services, or property carried out by a non-resident with any person in India for download of software if the aggregate value exceeds 2 crores. Okay, so if PE is there, no problem. If this is for people who does not have PE in India. Okay, you see various companies because of web. People in India download their software. Okay, Ipo, the one you are seeing on the screen, I downloaded a software, Xodo, Dinur software. I downloaded, and I'm able to correct in PDF. Okay, I'm not paying anything. Pay பண்ணி download பண்ணிருப்பீங்களான்னு கேட்காத. Okay, suppose if it is paid software, I will keep paying. Like me, so many people will keep paying. For the recipient, it is an Indian income which is going untaxed. Now, significant economic presence is part of business connection, and I will tax that income. What is significant economic presence? If your total turnover exceeds 2 crores. And next is exclusively for WhatsApp, Insta, all these things. They have all started their PE in India now, but I'm telling you, systematic and continuous soliciting, repeated, okay, of business activity, or engaging in interaction with active users to digital means. WhatsApp ne editla direct. Okay, okay. Provided the number of users should at least be 3 lakhs. Where are we talking? In a country of 130 crores plus. Yeah. We are only looking at 3 lakh people using, you have a significant economic presence in India. Indirectly, these people, we are forcing them to open their PE in India so that the Indian income becomes taxable. So, what I am coming to is the terminology of significant economic presence is defined in Finance Act 21. After that, we can go amend the definition, etc. But once the lawmakers have taken time to amend the definition, to give clarity to it, because Rumanala includes significant economic presence. Postpone next year, postpone next year, postpone next year. Board was not giving any guideline. Now, we have for transactions, monetary limit of 2 crores. For interaction, number of users limit of 3 lakh. More than that, you have a significant, okay, I am not just saying significant economic presence in the whole income is taxable. Only the Indian income is taxable. Okay, further, the above transaction or activity shall constitute significant economic, okay, the agreement or activities is entered in India. The non-resident has a resident or placer, the non-resident services. However, where a business connection is established by reasons of significant economic presence, only so much of income attributable to the transactions in India is taxable. Okay, I am only going to tax their Indian income. So much of income which is attributable to India is only taxable. Am I clear to you? Okay. It is not a, I would call administrative provision to monitor. They have brought the significant economic presence. In this, they also made Normally, in case of business where all operations are carried out outside India, there is no business connection. Ana idu digital marketing la every activity is carried on outside India only. Okay, we all know this website Alibaba. That owner is missing. Okay, we all know about this. Okay, carried out outside India, but the number of clicks. Okay, so the law was saying the income that reasonably attributable to the operations carried on in India will be taxable. How do I find it? Income from advertisement targeting Indian customers. Income from advertising. A foreign university gives an advertisement, university, education, everything carried on outside India, but gives an advertisement targeting Indians. To such extent, it is attributable. The income is attributable in India. So that's why they have all these agents doing that job. Okay. Income from sale of data collected for an IPA located in India, Internet Protocol Address located in India. Okay. Income from sale of goods from data collected residing from India or using an IPA in India. It might take some time to mature, but we have defined it at least. If you service a person who is there in India, who is accessing internet from India, whose IPA is in India, that means so much of the income is attributable in India to Indian operation. I will tax it. I will tax it. So actually there are three things. This is also important. 10 RB, business connection and advanced. Okay. This also, please remember business connection. Okay. Right. Some clarifications. What is liability to tax? This is especially for 90 and 91. This is more important. Okay. Liability to tax. Okay. You are, for example, Indian context, I am starting. You are having only agricultural income. Is there a liability to tax? No. There is no liability to tax. You are having business income and agricultural income. There is a liability to tax. Even though at the end of it, no tax is payable. There is a difference between tax payable is equal to 0. So no liability to tax. That's wrong understanding, right? If tax payable is 0, does that mean there is no liability is to tax? No. There is a liability. So similarly in foreign operations also, liability to tax to a person with reference to a country means an income tax liability on such person under the law of that country for the time being. It also includes a person who has been subsequently exempt. Just because an exemption is there, just because there is a deduction, it doesn't mean there is no liability to tax. Tax payable 0. But because of your planning, because of your computation, but there was a liability for tax. So this is an amendment for 1991. Okay, because people are saying if tax payable is 0, there is nothing. No. If that country is liable to tax you, then you are coming under the liability to tax regime. Just a clarificatory amendment, nothing. That we know ourselves. GDRs include those which are issued by IFSC also. Okay. Global depository receipt or global, these are taxable at 10%, both the dividend and the LTCG. Okay. Ordinary shares of issuing company, being a company incorporated outside India, if such depository such receipt or certificate is listed in IFSC, that is also considered as GDR. Just an extension, but we have seen this This is just taxable at 10%. Am I clear to you? Okay, right. Let me complete the amendment of other things and come to advance ruling. In equalization levy, there is no big amendment this year except definitions. In equalization levy, there is no big amendments this year, my dear friends. Definition: what is online goods, sale of goods and provision of services? Acceptance of offer for sale. Okay, by saying Amazon accepting to deliver or taking up the order, that means they are okay placing of purchase order by them. Acceptance of purchase order, payment of consideration is obviously supply of goods. Everything is known as online sale of goods or online provision of services. The act is just because so far we have just said where any equalization is levy is for those companies which does not have a PE in India but making online sales or services or providing services in India. We haven't defined what is online sale, what is online services. That is what is defined, and what is consideration. Consideration for sale of goods is irrespective whether the e-commerce operator owns the goods. He might just be a facilitator. He is just connecting. Okay. Assessee does not collect anything. Okay. They ask all the artists to register here. Customers can directly pay the artist and buy. They are only getting 15% commission from the artist. I am not owning the goods. ஏன்னா இந்த மாதிரி art related goodsலாம் நாளைக்கு ஏதாவது சின்ன ப்ராப்ளம் நீ ரிட்டர்ன் பண்ணிட்டேன்னா எனக்கு கஷ்டம். So they are directly asking, I am just a facilitator website. I say to the customer, if you want to put my products in my website, 250 rupees per month, and whatever you sell, 15% is my commission. I tell my customers, you can freely register. If you are accepting, you can buy. So, however, it shall not include consideration for sale of goods which are owned by a person resident in India or a permanent establishment, because we know this is equalization levy is not applicable for Indian operations. It is only if the person is having a foreign operation. Consideration of provision of services is irrespective of whether the service is facilitated by, okay, even then it will be considered as, this is just a clarification. Both are just an amendment which is on the definition. On the exemption, this last year we included this Abu Dhabi investment fund, sovereign fund, pension fund, which our Prime Minister and the Abu Dhabi Prince became very, very close, that they started offering exemptions both end. Okay, so eligible investment has been expanded. Till last year, it was only in petroleum sector and other sector. It will include business trust, infrastructure facility, which is the major, or in a domestic company having minimum 75% investment in companies which are promoting infrastructure. Okay, the company is a holding company, which in turn, okay, yeah, again a non-banking financial company promoting infrastructure, and category 1 and 2 of alternative investment fund. Okay, these things will also qualify for exemption. Again, business trust also we know is for infrastructure industry. So this is the whole thing is infrastructure industry. So far we are saying direct investment in infrastructure. Now we are saying even indirect investment, investing through a company, investing through business trust, investing through banking company. If you are investing in the infrastructure or development of India, I am ready to give you exemption. Okay, that is the two things which, okay, equalization levy and exemptions are very, very less. Okay, let us move on to advance ruling. Okay, if I can directly come to the question of advance ruling, previously advance ruling is binding. Now advance ruling can be appealed. முன்னாடி appeal போக முடியாது advance ruling. Voluntarily I have gone and got an advance ruling. Now advance ruling is appealable. both by the department and by the assessee. Directly go to the High Court because advance ruling is equal to ITAT. So directly go to the IA. Okay. Okay. Right. The, it changed on or after 1921. That is the key date. So one or more had advance ruling boards like interim board having headquarters in Delhi or Mumbai. They are going to be floated. Okay. Actually, first I will go here. Who can apply for advance ruling? Who can apply for advance ruling? Non-residents can apply for advance ruling, but because they are not very familiar with our laws, so they can go for advance ruling. Resident who is entering into a transaction with the non-resident to know the tax liability of the non-resident, to know the tax liability of that non-resident. Residents can also apply if the transaction value is 100 crores. If the transaction value is 100 crores, large transaction. PSUs can apply, public sector undertakings can apply. Last one which is now included is impermissible avoidance agreement. Agreements which are framed in such a manner that you are avoiding taxes. Impermissible avoidance agreement. Okay. Whether an agreement is impermissible or not, you can seek for the advance ruling. So non-residents can apply, my dear friends. Resident for non-resident. Resident provided it is 100 crores. Public sector undertaking. And to understand whether it is an impermissible avoidance agreement. I have entered into an agreement. Tomorrow you should not declare it as impermissible avoidance. So can I know it in advance? Okay. These are what cannot be applied. What cannot be applied is you cannot ask the advance ruling authority to determine the fair market value. That's the valuation officer. You should have gone to him. Okay. You should not ask him to determine the fair market value. You should not coin the statement in such a manner that it will lead to avoidance of tax. Okay. It will lead to avoidance of tax. Where a matter is pending with the court, appellate authority, I will not take it up. Where it involves fair market value, I will not take it up. Where it relates to a trial which is designed in prima facie, that it will avoid. In these three cases, I will reject your application. I will reject your application. When advance ruling, who can seek advance ruling? When advance ruling cannot be sought or when the application can be rejected. If the matter is already pending with an appellate authority, I will not encourage this. With where it involves fair market value, determination of fair market value or designed prima facie. Now coming back, where a resident application has made an application, then that goes out of the tribunal's purview. Direct High Court தான் இதுக்கு மேல போக முடியும். ஏன்னா what is appeal to a higher authority you should go. Advance ruling and tribunal are equal authorities. You cannot go. Okay. In other words, resident and assessee cannot pursue both the remedies, that is appeal or revision with the authority as well as an application for advance ruling. You withdraw that and come to me. Otherwise, go ahead only with that. Okay. Just because the board is not properly constituted, இங்க இருக்கு board ஓடிய இது 2 member, 3 member, 5 member. அது doctrine of indoor management. Just because board is not properly constituted, advance ruling cannot be void. A proceeding or pronouncement by advance ruling authority will not be questioned or will not be invalid on the ground merely because there exists any vacancy or defect in the board. Okay. So just because the board is not properly, that is indoor management, leave it to us. Okay. Who can apply? Okay. Application, how to apply? You should pay 10,000, okay, as the fees. Okay. An applicant can withdraw within 30 days from the date of application. Otherwise, he cannot withdraw. Okay. If you are if you are if you have applied under the old law where an application is made before 149 that is the till that time it is known as advance ruling authority. Now it is known as board. Okay, right? No advance ruling has been pronounced on, then the same will automatically be transferred. What do we call it as? Transition provision. This is known as transition provision. Automatically, it will come to the board. Okay. The procedure of AAR has not changed. Though you find it in blue, it has not changed. On receipt of application, communicate to the principal commissioner and get his opinion. Call for records when you can reject. Okay. No rejection unless an opportunity of being heard. Okay. Where application is rejected, then communicate to the both the authorities. Where application is allowed, then you become the AO. But you will not have people advance ruling. So they will ask the AO only to make further inquiries. The commissioner only to make it. Okay. Where the application is, authority shall, after examining such further material placed before it by the applicant, pronounce the advance ruling. Okay. On request of the applicant, he can ask the applicant to come in person. The time limit is the advance 6 months from the receipt of application. Within 6 months, AAR should give it and send a copy to both the parties. Okay. On the applicant, on the income tax authorities, this is applicable. But now, okay, now you can go on an appeal. This is important. This is new. Okay, both the applicant and the income tax department can go within 60 days from the date of communication of this order. However, where the High Court is satisfied that the appellant was prevented by sufficient, that 60 days, he can extend it by another 30 days. Okay, when it will be void, it is the same. Where you have got the report by misrepresentation of fact. By misrepresentation of fact, by application, by fraud or misrepresentation of fact, then it is void ab initio. Okay, right? The Board of Advance Ruling shall have the powers of Civil Code 131. Can send a summon, can ask the person to be present in, can ask the assessee to be present in person, and can ask for production of books and documents. 131 of the law says what are all the powers of that are vested with the income tax officer, which is normally vested with the CBI or police people. Okay, civil code. And examining him on both. Am I clear to you? Okay. I believe AAR will also be, I mean, now it is not AAR, board will also be a question. Somewhere board will also be a question for you. Significant economic presence, Rule 10RB will be the questions that are coming. These are all the amendments in advance rule, the international taxation. Very lesser amendment this year because your direct taxation had more amendments. International taxations have lesser amendments. Am I clear to you? So with this, I complete our amendment lectures. Okay. This amendment material will now come to you in another 2 hours. Okay. I will send you the amendment material and the amendment videos I have already uploaded 3 videos, but not yet to make it public. I will upload this also, today's video also, make it so that you can share it with your friends. Okay. Somewhere during the last week of March, I will again meet you for revision session. At that time, I will not take up amendment detail, but I will work out more questions from amendment also. Okay. Meanwhile, before that, I am, as I told the other day, I am planning some test on amendments, exclusively on amendments, some MCQ and related test. I will keep you informed about that. Thank you very much, my dear friends. Meet you again during the revision sessions. The material will come to you, so the videos are. All the very best.